First, on global. Look, just a few months back, I used to say that everything around global is turning out to be good for India. Now, it's a bit mixed. So what is good is that global growth is not falling off the cliff, as a lot of people would have worried. Even in Citi, our house view was of a very slow global growth year of less than 2% global GDP growth. We have upgraded that a bit. The second factor that was a big positive to start with was that interest rates globally would be cut significantly. The market expectation was that Fed will cut about 125 basis points or so. Now, it appears that because of the slightly higher growth and slightly more resilient inflation numbers, the expectation of interest rate cuts have come off. The market expectation is about 75 basis point rate cut, but for all practical purposes, now people are confused when and how much rate cuts are going to happen. But apart from these two, the most important thing for India has always been commodity prices, particularly oil. And this is the new development which is slowly being baked into markets, that oil prices has creeped up to $90 per barrel. I am no expert on geopolitics to tell you exactly where oil prices are headed. In fact, in Citi, our house view is that oil prices will come off from these levels. But just in case oil prices go up, let me give you the sensitivity of India's macro to oil prices. So the sensitivity is that about 10% increase in oil prices leads to about 15 basis point decline in India's GDP growth, and about 30 basis point increase in India's inflation, and about 0.4% of GDP increase in India's current account deficit. These numbers are not scary, particularly given that we are starting off from a very stable macro and growth environment. But the big but is that globally, the favorite trade for investors is to short Indian assets whenever oil prices go up. This is an instinctive reaction. And I'm worried that when a particular threshold of oil prices are reached, there could be some negative effect on investor sentiment regarding India, not as much a worry on the macro factors of oil price impact. I'll not have time to delve on two issues globally, but I think from a medium-term perspective, which we have to be worried about, which is that how this huge increase in global public debt is going to be unwound and how emerging markets would be impacted by that. And the second issue is connected to it is about global liquidity. In my view, global liquidity is still very ample, flush. When this liquidity is tightened, how that impacts EM assets is something also we need to understand. So that's broadly the global backdrop.